Let's welcome our market master for the day, Vineet Bhatnagar, Managing Director of PhillipCapital, is our market master. Vineet, good morning. Thank you very much. It's, I think, the most useful person we can speak when the market is giving you such confusing signals as someone who looks at the futures market as closely as you do. What is the sense you're getting? Have we actually seen the highs for the year?
If one of the scenarios does turn out to be, what could actually support the view that you are expressing here, it could. It could indeed happen that 8200 or thereabouts could become a high for the calendar year. However, what we are seeing, and I think the litmus test for the market will perhaps be this week itself, is that if based on the flows that we have seen, which were actually the cash market flows were negative from the FII side. The way the FIIs have repositioned themselves on the index futures from a net long position, which was about $1.3 billion to just about $600 million. My own sense is that if the Nifty on a closing basis does not close above 8030 by the end of this week, then we are headed for an intermediate correction, which could turn out to be a little sharp.
That may not be a very tall ask. It is still only 50 points, 8030 from current levels. But is there an even chance that 8030 could happen?
I think that it is more to do with how this will pan out in the next 3 days in terms of the Friday close.
Okay.
So the reason I'm looking at it is because I want to see whether on a weekly basis there is a weakness that is demonstrable. Because, for example, if it were to close above 8030 today, right, on the back of the gap up opening, but Thursday, Friday does contribute to a sell-off, then what I'm talking about is what my concern is. That on a weekly basis, Nifty should close above 8030.
Okay. Vineet, hi, good morning. So if we do see this, medium-term correction, what could the base of the market be?
If it were to happen, which means 8030 does not come about, on closing level for this Friday, then the level that I will be looking at, which is also how the put build-up is from the FIIs now, is actually around 7830, 7840. There is a confluence of a few things around that level. It happens to be a 50-day exponential moving average for Nifty. It happens to be a Fibonacci number. It happens to be also break-even number for the put build-up that has started happening in the last 2 days.
Okay. So in terms of individual stocks, where do you see the biggest pressure pockets now? Because if you look at what's taken place this month, we've seen some banks, Bank of Baroda, IndusInd Bank, some of the auto stocks, etc., come in for a little bit of profit trimming or profit taking. Where do you see pressure pockets emerge?
Actually, I would like to answer the question in a converse way, which is that if the market were to not crack, then where will that rally or a relief rally can come about? And for that, by elimination, it is looking that it could come about from pockets like private sector bank, ICICI Bank could lead, HDFC Bank could lead, HDFC Limited has not fallen much. Axis, which is looking red at the moment, could actually could join the bandwagon. Tata Motors and M&M could provide that support to the market. That's how I'm looking at it. If the market, on the other hand, were to actually start cracking, then not only will that old, adage of everything goes down when the tide is going down will come about, but the weakness that was seen earlier this week in power, in capital goods, in some of even the large cap, cement stocks will only get exacerbated. Okay. So that's how I'm looking at it.
The big fear in the market has been that if that crack comes, as you say, and the market goes towards that 7830 levels, then mid caps will crack even more because we've seen them outperforming for a better part of this contract. You fear that?
Okay, yes, indeed so. So as far as the the simple assessment of the mid cap and small cap is concerned, they are high beta stocks. They are going to underperform more than the benchmark, no doubt about it. But mind you that some of the mid cap stocks are still quite up for the month, despite the last 2 days of tremendous sell-off. Right. Also, what I'm seeing is that there are still some mid-cap stocks on a selective basis that could still look strong. For example, we still like Escorts, we still like Godrej Properties. These are the names that we are still White Laboratories. These are the names which we think could still provide some strength.
Okay. So you did mention that the range for this market could be about 7,800 on the downside to 8,200 on the upside.
Yes.
What would the most prudent F&O strategy be at this juncture?
I guess what we would look to do is buy one call of 8,000 strike and sell two of 8,100. The approximate cost as an outgo is about 10 rupees with an upside of about 90, and the break even comes at 8,190. So, that is the strategy that we could advise our clients.
Okay. One of the stocks that have shown relative resilience has been Dr. Reddy's. Any strategy on that? In fact, any of the pharmas, I think a bunch of them have shown resilience.
I think Cipla looks good because of the new drivers that are visible in terms of the new drug and the strategy that they have put out in the market. Lupin was looking good, but as I heard from you, there is some profit taking there. DRL on the back of the drugs that they're looking at for oncology could have a growth driver, which is a long-term growth driver for DRL.
Okay. Well, I wanted to ask two other pockets of strength yesterday when the market was falling. Bharti Airtel stood out, Infosys stood out. Would they also be relative outperformers when the markets rise, when the markets fall?
We like both of them. We like both of them from both the sectors. Both the sectors have the characteristic of a defensive play when the markets do crack. There is no doubt about it. The good thing about these two stocks is also the fact that for new money that comes into this country, these will be the picks that will form part of any new portfolio investor.
Okay. The pocket that has been weak this month is oil and gas, but it's been stocks like BPCL have been the strongest stocks this year. What would you do with the names like BPCL and ONGC?
I guess there are multiple plays as far as the oil and gas sector in India is concerned. One, of course, is the easier benchmark of Brent and the impact that it could have on the OMCs. That's one play that we need to take into consideration. The other play is, of course, the valuation and a possible disinvestment from some of these companies that will come about for fiscal management by the finance ministry. And the third one is that oil and gas has not run up so much, not necessarily the BPCLs as others. Kane, however, on the other hand, is looking weakish this week.
All right. By the way, the mid-cap index has now slipped into the red. So after having a very strong opening, it was up 1% when we started. In less than half an hour, it has now dipped straight into the red. And lots of stocks, names like IRB Infra, Federal Bank, GMR Infra, Crompton Greaves are all down about 0.5 to 1%. As our experts were telling us, the worst of the mid-cap index does not seem to be over just yet.
Just two stocks I wanted to point out. Snowman Logistics, after rising after its listing for 2 days in a row, I think today is showing signs of weakness. And who will be the obvious guy who will be hurt? Gateway Distriparks. That one is
all
down.
Those logistic companies that rallied ahead of the
I mean, they have ownership in this stock as well. So they ran up, they have a 54% stake. So they ran up because of that. That's down 8% now. Gateway Distriparks, 7.5% to be precise. And oil stocks, as you mentioned, some weakness is coming into IOC as well. That's down 1.8%, BPCL down 1.5%, ONGC down about 1%. So oil is clearly taking a bit of the pressure, largely because you have seen that Brent kind of bottoming out. But yeah, even cement stocks, you can see a sharp cut in India Cements. JP Infra is taking a 2.5% cut. JVK Power and Infra 2% cut. IRB Infra 1.6%. So the market is quite clearly taking its toll on a whole host of mid caps. And prominent among them are the infrastructure companies. Many of them had seen, why even real estate. I think HDIL is seeing a bit of a nick, 1.4% down. What would be the counters to avoid in the mid-caps?
I think the counters to avoid are the ones that you are just, mentioning here. Really the ones which are from infra, real estate, these are the stock, and power, of course.
So take profit quickly if you are in it.
I guess the strategy that some may have walked in with would be to, sell on any upticks this morning. And of course, there was panic, that set in as far as the retail investors and the mutual fund investors are concerned. So, we always get hurt the most as retail.
So far, we've seen a very smooth run since the start of the year. Not too much volatility as such. But now, do you get a sense that the second half of this year could make it could see a lot of volatility and make it very difficult for traders to make money?
Yes. I think so. My own sense is that by the time we run out of this calendar year, the volatility as well as the VIX would show an uptick and an uptrend. In fact, what was what was bothering us was that when the market was making highs, 8100s and upwards, the increase in volatility was visible there. So there was no sanguine approach by the traders at the higher levels. Higher volatility only was symptomatic of nervousness and being on tenterhooks that this will give in.
Okay. Actually, from February, isn't it, the Nifty has been closing higher every contract, 7 contracts in a row. September could break the trend, do you think?
In fact, somebody was telling me yesterday that there is some empirical study that someone has done, which is only interesting and also quite awkward, that Nifty on an index has never closed month on month for longer than 9 months. Okay. So after the 8th month it snaps. Okay. So I think we are in that particular month.
All right, Vineet, we leave it at that. Thank you for joining us and giving us your perspective. So that's the word coming in from PhillipCapital. 7830 to 8200 is the range for the Nifty.